The global economy is at a crossroads in early 2025. The decisions made now will shape the future of international trade and economic stability for years to come. The United States and China, the world's two largest economies, are locked in a bitter trade dispute. This conflict has far-reaching implications, affecting not just the two nations involved but the entire global market. This has created uncertainty and volatility in global markets. Investors are on edge, and stock prices fluctuate wildly with each new development in the trade talks. Businesses and investors are wary. They are hesitant to make long-term commitments, fearing that the situation could deteriorate further. They are delaying investments as they wait for clarity on the future of US-China trade relations. This hesitation is stalling economic growth and innovation. The trade war began in 2018. It started with tariffs and quickly escalated into a full-blown economic conflict. It escalated throughout the following years. Each side imposed increasingly severe tariffs, affecting a wide range of industries. Both sides imposed tariffs on billions of dollars worth of each other's goods. This has disrupted supply chains and increased costs for businesses and consumers alike. There were attempts at a truce, negotiations were held, and temporary agreements were reached. These ultimately failed to resolve the underlying issues. The core disagreements remain, and tensions continue to simmer. The trade war is a symptom of a larger geopolitical rivalry between the two superpowers. This rivalry extends beyond economics to military and technological dominance. The US is concerned about China's growing economic and military might. This has led to a broader strategy of containment and competition. The US sees China's trade practices as unfair. They argue that China engages in practices that distort the market and give it an unfair advantage. These practices include intellectual property theft and forced technology transfer. American companies are often required to share their technology to do business in China. China, for its part, feels that the US is trying to contain its rise. They see the trade war as an attempt to stifle their economic growth and maintain American dominance. China believes the US is threatened by its economic success. They argue that their growth is a natural result of their hard work and innovation. The trade war has had a significant impact on the global economy. Global growth has slowed. Economists warn that prolonged conflict could lead to a recession. Businesses are facing higher costs. Tariffs have increased the price of raw materials and components, squeezing profit margins. Consumers are paying more for goods and services. The increased costs are being passed down the supply chain, affecting everyday purchases. There is a growing sense that the trade war could have long-term consequences for the global economy. The uncertainty is affecting investment, innovation, and economic stability worldwide. The world watches closely, hoping for a resolution that will restore confidence and growth. In early 2025, the trade war between the US and China escalated further, marking a significant turning point in their economic relations. The US imposed new tariffs on a range of Chinese imports, aiming to curb the influx of goods that they believe are unfairly subsidized. These tariffs targeted key sectors such as electronics, machinery, and consumer goods, which are vital to both economies. In response, China retaliated with tariffs of its own on US agricultural products, automobiles, and energy, striking at the heart of American industries. The US tariffs were aimed at pressuring China to make concessions on trade, hoping to level the playing field. The US wants China to address its unfair trade practices, which have long been a point of contention. These practices include forced technology transfer and intellectual property theft, issues that have plagued US businesses for years. Additionally, the US is pushing for China to reduce its significant trade surplus with the US, which has been a major source of economic imbalance. China, on the other hand, has argued that its trade practices are fair and in line with international norms. Despite the tensions, China has expressed a willingness to negotiate with the US, seeking a resolution that benefits both parties. However, China has also made it clear that it will not back down in the face of US pressure, standing firm on its policies. China has accused the US of protectionism, arguing that the tariffs are a means to stifle competition. It views the US actions as an attempt to stifle its economic growth and maintain American dominance in global trade. As the trade war continues, the global economy watches closely, aware that the outcome will have far-reaching implications for international trade dynamics. The stakes are high, and both nations are navigating a complex web of economic and political challenges in this ongoing battle. The escalation of the trade war has sent shockwaves through global markets. Stock markets around the world have experienced heightened volatility. Investors are concerned about the impact of the trade war on global growth. The trade war has disrupted global supply chains. This has led to higher costs for businesses and consumers. The uncertainty surrounding the trade war has also made businesses hesitant to invest. This has further dampened economic activity. Hedge funds and investors are closely watching the situation. Some are taking advantage of the market volatility to make short-term bets. Others are looking for opportunities in Chinese markets. They believe that Chinese stocks are undervalued. They see potential for growth in the long term. The trade war has also had significant geopolitical ramifications. It has strained relations between the US and China. It has also led to a reassessment of alliances by other countries. The trade war has put other countries in a difficult position. They are being forced to choose sides between the US and China. Some countries, such as Japan and Australia, have sided with the US. They share US concerns about China's trade practices and its growing military power. Other countries, such as Russia and Iran, have moved closer to China. The trade war is part of a broader competition between the US and China for global influence. This competition is playing out on multiple fronts, including economics, technology, and military affairs. Section 5. Law of the Sea. Navigating disputes in contested waters. This section delves into the complex and often contentious issues surrounding maritime boundaries and the enforcement of international maritime law. The United States has also taken legal action against China regarding its maritime practices in the South China Sea. This legal action is part of a broader strategy to uphold international norms and ensure that maritime laws are respected by all nations. The U.S. argues that China's claims in the South China Sea are excessive and violate international law. These claims include vast areas that are also claimed by other countries in the region, leading to heightened tensions and disputes. Moreover, the U.S. has conducted freedom of navigation operations in the region. These operations are intended to demonstrate that the waters are international and open to all, challenging any unilateral claims of sovereignty. By doing so, the U.S. is challenging China's claims and asserting its right to navigate international waters. These operations are a clear signal that the U.S. does not recognize China's extensive territorial claims. China, on the other hand, claims sovereignty over most of the South China Sea. This claim is based on historical maps and documents which China argues give it the right to control these waters. They have built artificial islands and military installations in the region. These constructions are seen as a way to bolster their claims and establish a stronger presence in the contested waters. From China's perspective, the U.S. actions are seen as provocative and a violation of its sovereignty. Chinese officials argue that the U.S. is interfering in regional matters and escalating tensions unnecessarily. The South China Sea is a major shipping route and is also rich in natural resources. Control over this area means access to lucrative shipping lanes and valuable underwater resources, making it a highly strategic and contested region. The dispute over the South China Sea is, without a doubt, one of the most dangerous flashpoints in the world. The ongoing tensions and military presence from multiple nations make it a potential hotspot for conflict, with global implications. Section 6. Seeking common ground. The path to a mutually beneficial trade deal. Despite the escalation of the trade war, there have been some efforts to find a negotiated solution. Back-channel talks have continued between the US and China. Both sides have expressed a willingness to reach a deal. However, significant differences remain. A balanced trade deal would benefit both the US and China. It would also be good for the global economy. A deal would need to address the concerns of both sides. The US wants China to address its unfair trade practices. China wants the US to remove its tariffs. A deal would require compromise from both sides. It remains to be seen whether the two sides can overcome their differences and reach a lasting agreement. Section 7. The high stakes of cooperation, a shared future, hangs in the balance. The outcome of the US-China trade war has significant implications for the global economy. A protracted trade war would damage global growth and lead to higher prices for consumers. It could also lead to a decoupling of the US and Chinese economies. This would have far-reaching consequences for the global trading system. On the other hand, a resolution of the trade war would boost global confidence and support economic growth. It would also help to stabilize US-China relations. This would have positive ripple effects throughout the global economy. The world is watching closely as the US and China navigate this critical juncture. The decisions made by both sides will have a profound impact on the global economy for years to come. Section 8. The Dragon and the Eagle. Finding harmony in asymmetry. The US-China trade relationship is complex and multifaceted. It is characterized by both cooperation and competition. The two countries are deeply interconnected economically, yet they have very different political systems and values. The US and China need to find a way to manage their differences and coexist peacefully. This will require both sides to be pragmatic and willing to compromise. It will also require a recognition that the two countries have a shared interest in a stable and prosperous global economy. The relationship between the US and China is often referred to as the defining geopolitical relationship of the 21st century. The way in which the two countries manage their rivalry will have a profound impact on the world. Section 9. A new dawn for global trade. The US-China trade war is a symptom of the challenges facing the global trading system. The rules-based trading system established after World War II is under strain. It is struggling to cope with the rise of China and the changing nature of global trade. The world needs a new framework for global trade. This framework must be able to accommodate the interests of both developed and developing countries. It must also be able to address new challenges such as digital trade and climate change. The US and China have a responsibility to work together to reform the global trading system. A more open, fair, and rules-based trading system would benefit all countries. It would help to ensure a more prosperous and peaceful future for the world.